Hello, good morning. My name is Nestor Armstrong, and I'm part of the Etoro Popular Investor Program. I'm joining you right now from my actual office. Finally, the lockdown has decided to give us a few measures of security. We have to use some masks so that I can have access to the facilities, and we're taking the proper measures, temperature checks, and we're also um, checking the hand washing and everything like that. I hope that you are all safe, you are all healthy, because the although the infection seems to be calming down, more people are getting infected. So I am pleased to say that copier profitability has risen to 98.75%, which is a high accomplishment for the account, and I'm happy that almost virtually all of my copiers are on the green and are profitable. I wanted to explain a couple of movements that I made recently on my account. I specifically bought some stock for the Royal Caribbean, Norwegian, Delta Airlines, and United Airlines. Why did I do that? Why did I decide to buy those stocks? Basically, they have lost 50 to 60, almost 70% of their value. They are stocks that have been weathered down by the storm of the coronavirus. Is this a shift from my strategy? No, I'm still a value investor. I still see and analyze the companies, and I'm seeing that these companies' value plummeted because basically they cannot be allowed to work. They cannot go out into and do they cannot do their normal operation. So basically, they have to lay off the people. They have to lay off the workers, and that is affecting because they cannot operate. They cannot hold their value, and though and such they are on levels not seen from 2012, 2013, and that is the sort of companies that you want to look out for. Now, sure, you can tell me, well, why don't you buy Apple? Why don't you buy Google or PayPal, which are on my radar? Uh, that is not the case because they are almost at all-time highs, if not even higher than they were on back on February. What does that mean? That means that they are not currently reflecting the situation. There is no possible way that Apple and Google and all of those other services are doing so well when the rest of the economy is plummeting. And you can argue, yeah, sure, but maybe they're selling more online than they did on their physical stores, which are still closed and are beginning to open. But you're seeing conflicting reports that people don't even have enough to pay their own rent. People that are struggling, people that are getting fired. And sure, some people are still working, such as myself. I have a business that I have to keep, and we are working again. But that's not the rule. I mean, I'm seeing people that are struggling to even find a place to live, and that is setting off alarms on my brain saying that perhaps what I'm seeing on the market is not what is really happening on the world. And as a value investor, I always keep track of the good news and the bad news, but what I make the most attention out of are the bad news. Why? Because they create great buying opportunities. Stocks go plummeting down, nobody wants them, there's blood on the streets, again, taking into the philosophy of be greedy when others are fearful, and fearful when others are greedy. And that is what I'm seeing in the market right now. I'm seeing a market where there are stocks that are just like, oh, it's going up, like Tesla or Neo or even Apple or PayPal. That look, it's going up, it's gonna go up, it's gonna go into the hundred thousands, and there's no stopping that stock. Those are the type of stocks that I have no interest in. I buy on bad news and sell on good news. That is the philosophy that makes money. That is the philosophy that Warren Buffett. Although Warren has lost a lot in the past couple of months. But at the end of the day, you want companies that are good and that are undervalued. Right now, all of those cruise line airlines are great companies. Right now, they are not being able to operate, so their value plummets. And so they're just waiting for someone to buy back their stock. I mean, I could go around and say, okay, I'm going to buy Apple at the all-time high and see if that works. Or I'm going to go buy Google or Amazon, which are at all-time highs. You don't buy at all-time highs. You sell at all-time highs. That is a mistake that many people do, and I can attest to that. I did that on my early days of investing. I saw a stock that was going up and up and up, and I'm like, I should get on this bandwagon. That's when I'm greedy, and you lose. Sometimes you don't. Sometimes you get into a good entry point, and you are uh, prudent enough to get out at a higher point, and that is fine. But that is usually not the case. The usual case when you buy at all-time high is you get a correction and you say, "Oh my God, why did I waste that much money? I knew it. This was too good of a deal to be true," and you sell it. You buy high and sell low. My current sentiment on the market right now is I'm waiting for opportunities to become clear, so that I have no doubt in my mind that I'm buying a good company at a good price, not a good company at a bubbled price, because that's what's happening when the Fed starts pumping in money into the stock market. It creates an artificial bubble of value, and it wreaks havoc on the numbers that you could ever make. And seeing that type of advancement on behalf of the U.S. government makes you suspicious. It makes you suspicious that, well, not everything is about life. It's more about money. And to me, I think they should be focusing more on the health side of the things than on the economic part. You shouldn't neglect either side, but I feel that they're neglecting their population so that the president can look good for a re-election. In essence, we are right now above the S&P 500, and we are well on our way to meeting the goal of beating it this year, and hopefully every year after that. Also, copier profitability is at the 98.75% right now, which I'm very proud of. I hope in the following weeks we'll be able to get some more buying opportunities from companies when they release their data, and it says what inevitably will say, that the sales have not been good, and that the transactions have slowed down, the economy has been slowing down. If not, we'll keep monitoring the consequences of this virus all the way into the October earnings release date, which will create a lot more of opportunities for us to fetch. What do you think? Do you think the economy is going up for a recovery, or is it going down as many analysts are claiming? If you like this sort of content, please give me a thumbs up so I know that you enjoy this type of videos and this type of format. I hope that you stay safe, your family stays safe, stay inside if you have nothing to do outside, or if you have to work, make sure you take the proper precautions to do so. I know I'm doing. So I bid to you, stay safe and trade smart.